Every day, billions of people check stock prices, monitor inflation rates, and assume that market movements are the natural result of human supply and demand. You look at the trading floors and see people actively making choices, but behind those digital tickers sits an invisible mega machine, a $25 trillion network of shadow assets that monitors every bond, real estate deal, and currency flow on Earth, operating entirely outside the reach of democratic laws. To understand who actually controls this wealth, you cannot look at a normal trading day. You have to watch what the hidden machine actually does the exact moment a sudden systemic economic shock hits. A severe panic triggers a synchronized reaction across 4 distinct hidden pillars of global finance, revealing exactly what they were built to do. When the global economy faces total collapse, this architecture activates. It secures elite capital offshore, while leaving the everyday citizen exposed to absorb the resulting financial crater. We start with the central nervous system. Developed in secret, an artificial intelligence supercomputer known as Aladdin, short for Asset, Liability, Debt, and Derivative Investment Network, operates from deep within BlackRock. This visualization shows how Aladdin preemptively detects risk. It models thousands of economic scenarios, running millions of daily Monte Carlo stress simulations across every major asset class to output precise threat predictions. This single algorithmic engine monitors over $25 trillion, representing 10% of all global wealth. If a crisis strikes and Aladdin flags a specific asset class as toxic, capital flees globally within milliseconds. Because the system dictates market moves faster than human thought, flesh and blood fund managers are largely obsolete in preventing or managing economic crashes. When that capital flees, it needs a sanctuary. In the geographic center of the UK capital sits an ancient, independent city-state, the City of London Corporation, also known as the Square Mile. This enclave operates completely separate from normal democratic laws. It is older than the British Parliament itself, functioning with its own medieval constitution, its own mayor, and a private police force. It even maintains a permanent, unelected official called the Remembrancer, who sits physically inside the House of Commons, to ensure no parliamentary law infringes on the enclave's financial privileges. This diagram illustrates the euro-dollar market operated by the Square Mile. You can see trillions of dollars bypassing national tax regimes, financial disclosure laws, and public audits, funneling straight into a giant, unregulated offshore laundromat. While national governments enforce strict austerity and tax their domestic populations, this sovereign enclave quietly provides an untouchable island where institutional wealth can hide during an economic storm. But a hiding place isn't enough if the physical cash dries up. The real existential threat during a global panic is always a catastrophic shortage of physical US dollars overseas, which foreign banks need to stay solvent. To prevent immediate insolvency, the Federal Reserve utilizes a covert crisis tool, central bank liquidity swap lines. They activate this with absolute legal power, requiring zero congressional approval, public debate, or open votes. This map shows the mechanics of the bailout. The Fed creates hundreds of billions of digital dollars out of nothing, secretly swapping them with a hand-picked inner circle of allied foreign central banks to keep their offshore networks afloat. The Bank of England sits securely inside this protected inner ring. The European Central Bank is also a prime beneficiary, and the Bank of Japan serves as the final major pillar in this invisible safety net. If your nation is inside this closed circle, your financial system is saved. If you are outside the circle, your currency collapses, your debt costs skyrocket, and your economy is forced into fire sale liquidations. Once the crisis settles and the liquidations finish, the focus returns to the everyday investor. When a bank or brokerage fails, who legally owns the underlying assets? This animation illustrates a process called dematerialization, managed by central entities like the DTCC. Physical assets are dissolved into digital records, locked in institutional vaults. What the public actually holds is a security entitlement. It is a contractual claim routed through a multi-tiered chain of intermediary brokers and clearinghouses, not direct legal ownership. In the event of a systemic financial insolvency, clearinghouse rules prioritize institutional derivative counterparties first. Everyday retail investors and retirement account holders are legally classified as unsecured general claimants, pushed straight to the back of the line. The modern legal framework was precisely arranged to concentrate the physical control of valuable assets inside private clearinghouses, while shifting the actual market risk entirely onto the public. As the financial headlines fade, everyday citizens are left to absorb the resulting damage, assuming that the free market simply broke under pressure. But the shadow system did not break. It activated algorithms, diverted capital, executed secret bailouts, and prioritized institutional claims, functioning with ruthless mechanical perfection. You are not a participant in the global economy. You are simply the underwriter of its risk.